For decades, the global banking system has run on infrastructure that most people never see and honestly would be shocked to learn how old it is. Behind every international wire transfer, every cross-border payment, and every settlement between banks sits a system built in the 1970s. Slow, expensive, fragmented, increasingly out of place in a world that now moves at internet speed. This is exactly where blockchain enters the conversation and why XRP keeps coming up whenever banks, central banks, and financial institutions talk about the future of money. XRP isn't just another cryptocurrency chasing hype or retail speculation. It was designed from the ground up to solve a very specific problem: how value moves between banks across borders. Today, when a bank sends money internationally, often relies on a chain of correspondent banks. Each one takes a fee. Each one adds delay. Settlements can take days, sometimes longer. Billions of dollars sit locked up as pre-funded liquidity just to keep the system running. Blockchain changes that equation entirely. Instead of moving money through multiple intermediaries, blockchain allows value to move directly, with near instant settlement and full transparency. XRP's underlying technology, the XRP ledger, was built to act as a bridge currency, something that can instantly convert between different national currencies without requiring banks to hold massive reserves overseas. In simple terms, it turns a slow, multi-day banking process into something that can happen in seconds. This is why banks don't look at XRP the same way they look at meme coins or speculative tokens. For them, this isn't about price charts, it's about infrastructure. What makes XRP particularly interesting is its focus on compliance and institutional use. While many blockchains were built to bypass the financial system entirely, XRP was designed to work with it. That's why discussions around XRP often include central banks, payment providers, and global financial institutions. The goal isn't to replace banks overnight, it's to modernize how they settle transactions behind the scenes. And that shift is already happening. Around the world, banks are quietly testing blockchain-based settlement systems. Central banks are experimenting with digital currencies. Payment rails are being upgraded. The public still sees money as numbers on a screen, but underneath, the plumbing is changing. Blockchain offers something traditional systems struggle with: real-time settlement, lower costs, a single shared ledger that reduces errors and disputes. XRP fits neatly into this transition phase. Think of it as a translator between old finance and new finance. Banks don't need to abandon their existing systems overnight. They can integrate blockchain gradually, using XRP as a liquidity bridge while still operating within regulatory frameworks. That's a key reason XRP keeps surviving market cycles while thousands of other projects disappear. Of course, this shift raises bigger questions. If banks move settlement to blockchain, what happens to the traditional intermediaries? What happens to delays, hidden fees, and opaque processes? Transparency becomes the default. Speed becomes expected, and once customers realize money can move instantly, tolerance for the old system drops fast. This is where resistance comes in. Financial systems don't change easily. Regulations move slowly. Institutions protect legacy structures, but pressure is building from multiple directions at once: globalization, digital commerce, instant payments, and competition from fintech companies that don't carry decades of technical debt. Blockchain isn't forcing change by ideology, it's forcing change by efficiency. XRP sits right at the center of that pressure. Another reason banks pay attention to XRP is scalability. The XRP ledger can process transactions quickly and at low cost, without the extreme energy usage associated with some other blockchains. For institutions that care about reliability, predictability, and environmental impact, this matters. Banking infrastructure must work every second of every day, not just when the network feels like it. Now zoom out even further. The move to blockchain isn't just about faster payments. It's about programmable money, smart settlement, atomic transactions where payment and delivery happen simultaneously. Imagine international trade where funds are released the moment goods arrive. Imagine payroll, remittances, and treasury operations running on shared ledgers instead of isolated databases. This is why XRP is often discussed alongside the future of the banking system, not just crypto markets. Still, this transition won't be loud or dramatic. You won't wake up one morning and see banks announce, "We're fully on blockchain now." It will happen quietly. Back-end systems first, pilot programs, limited corridors, then expansion. The time the public realizes what's changed, the old system will already feel outdated, and that's usually how infrastructure revolutions work. There's also a psychological shift happening. For years, blockchain was framed as anti-bank. Now it's increasingly seen as post-bank, not replacing institutions, but redefining their role. Banks become service layers on top of faster, more efficient settlement rails. XRP aligns with that vision far more than projects built purely on decentralization ideology. Of course, none of this guarantees success. Regulatory clarity, adoption pace, and geopolitical factors all matter. But one thing is clear, the conversation has moved beyond "is blockchain useful" to how fast can we integrate it without breaking everything. That's a very different debate. In that debate, XRP keeps showing up because it speaks the language banks understand: liquidity, settlement, compliance, efficiency. It's not trying to disrupt finance with chaos. It's trying to upgrade it with precision. There's also a geopolitical layer to this shift that often goes unnoticed. Cross-border payments aren't just a technical issue, a strategic one. Countries that control payment rails hold enormous financial influence. As blockchain-based systems mature, nations and financial blocs are looking for alternatives that reduce dependency on legacy networks and single points of control. XRP's neutral, bridge asset design makes it attractive in a world where financial systems are becoming more multipolar rather than centralized around one dominant currency or network. Another quiet driver is consumer expectation. People now expect instant results in almost every part of life: messages, deliveries, content, and services. Money is one of the last things still moving at bank speed. As blockchain-based settlement proves that instant low-cost transfers are possible, public pressure on banks will increase, even if customers don't understand the technology behind it. Once speed becomes the norm, slow settlement feels unacceptable. What's unfolding isn't a crypto takeover, it's a financial evolution. Banks aren't abandoning control, they're upgrading their tools. Blockchain becomes the new rail, and assets like XRP act as the lubricant that keeps global value flowing smoothly. The transition may be quiet, technical, and gradual, but its impact will be anything but small. When the rails change, the entire financial world moves with them, and this evolution doesn't stop at international transfers. As blockchain rails mature, they begin to touch lending, asset tokenization, and even how collateral moves between institutions. Real-world assets like bonds, real estate, and commodities can settle instantly instead of waiting days for reconciliation. That efficiency frees up capital, reduces risk, changes how liquidity is managed across the financial system. XRP's role as a fast, neutral settlement layer fits naturally into this broader transformation. Money and assets move as seamlessly as data, quietly reshaping banking from the inside out. The bigger picture is this: money itself is becoming digital infrastructure. Email replaced letters and streaming replaced physical media. Blockchain is slowly replacing the rails that move value across the world. You may never directly touch XRP. You may never even know it's involved. But if banks adopt blockchain at scale, systems like it could be doing the heavy lifting behind every transaction. And when infrastructure changes, everything built on top of it changes too. The move toward blockchain-based banking isn't about hype, it's about inevitability. The question isn't whether the system will modernize, it's who will power that modernization. And XRP, whether people love it or doubt it, remains one of the few digital assets designed specifically for that future. The banking system is moving, slowly, carefully, but unmistakably, and blockchain is no longer knocking at the door, it's already inside.